Well, investor risk appetite is at its highest in 3 years. That's according to a new Bank of America survey out today. We're joined at the desk now by Yahoo Finance's very own Josh Schafer. Each of us is picking one chart from this B of A survey, Josh, to dive into. So let's start with you. What are you interested in here?
We're at a really exciting chart on bond yields, right? We always want to talk about bond yields. Guys, why not? Expectations for lower bond yields falling to a one-year low, according to Bank of America. And the reason I point this out is similar to some of the conversation you guys were just having about rates here. And we've seen basically a repricing of what we're expecting from the Fed this year down to about 3 cuts now for the year. And the largest question I think right now, though, is how long are we going to see this volatility in the rate trade? Because right now that volatility in the rate trade, when you look at some of the things that benefited from the dovishness in December, like a small caps, that's down almost 2% over the last week, while the S&P is actually up a little bit if I was looking at my charts right earlier. So you've seen a significant lagging still from small caps compared to the S&P 500 as we've gone into this unsteady trade. One thing that was interesting, though, in that trade that Mike Wilson over at Morgan Stanley was pointing out is you've still seen large caps be able to perform here. It just hasn't necessarily been tech. You've seen a little bit of a cycle into more of a broadening out. And so that's kind of my biggest question post-Fed. Is can we still see some support here and some broadening out even if the dot plot doesn't come in that dovish? Is the trade still broadening out or is it a sell-off?
Well, and it's what it comes back to, too. And this takes us to my chart, actually, because it's a little bit more on macro as it came through via this fund manager survey. And 2/3 of the respondents here, which was interesting, saying that recession is unlikely in the next 12 months. There you're taking a look at the chart here. The recession risks dissipating. And particularly, one of the things that was noted here is that the global economy will experience, well, they said it was unlikely that the global economy will experience a recession in the next 12 months. Get this, and take a look at that chart. That is the most since February of 2022. So the highest level that we've seen since 2022 of respondents saying that it is unlikely we would see a recession. So that perhaps dovetails into some of the common confidence or the risk on tenor in some of the...
Here's the question, Brad.
Yeah, sure.
Does that start coming down if we end up in a higher for longer state and we have people start talking about lagging impacts again? I'd be curious what that chart looks like in 2 months, right? Because we've had everyone talking, no recession, we're in great shape, we're in great shape.
Right.
When do some of these economists start saying, should I be worried about the labor market?
Well,
we were worried about the labor market with high rates, right? And now we're talking higher for longer.
Right.
Does this start to come back down? Everyone's taken off their recession call in the last 6 months, it feels like. Does that start to shift back? I think will be interesting.
You would think it would, right? Because it kind of goes to the narrative that we were talking about, at least at the beginning of 2023, this expectation, Josh, like you were just saying, the higher for longer, the fact that we were in the expectations very different from the scenario that we're looking at today. But if we do see any sort of change to the dot plot, like our previous guest Christy was talking about, if we do see any sort of a risk here that maybe the Fed is only going to cut 2 times, maybe that doesn't necessarily impact equities, at least to the extent that many are fearing it would. But you would think you would get some more people, at least a handful more people, saying that the risk of recession is a little bit higher than what it is today.
Right. Someone's got to be contrarian, Sean.
Someone's got to be.
Well, yeah. Well, 62% of these respondents, and it's what the respondents are saying. 62% of them saying there's a 62% probability of a soft landing here. So that is the consensus as of right now.
All right, and real quick, we're going to throw up my chart because we're talking about the most overcrowded trades, how people are positioning. We have seen a bit of a shift, and long Mag 7, the most overcrowded or the most crowded trade, at this point. 58% of respondents saying that. So we have seen a bit of a shift here. In terms of whether or not we're in an AI bubble, the other topic that everyone loves to debate at this point, the respondents were pretty split. 40% saying that we are in a bubble, 45% saying no. So the jury is still out on that. Time's going to tell on all of our charts.
Bitcoin was on there.
Bitcoin.
Long
right?
Bitcoin.
Sean,
Made its fifth appearance.
Skip the headline. 10% people are long Bitcoin.
Exactly.
I knew
It's
Brad
first
wanted to talk
appearance in
about
the
it.
chart.
I know. All right, well, when we do this again, my chart's going first. All right, Josh, thanks so much.